Hi guys, here's Doc's Market Minute for Friday, January 22nd. We got a little bounce happening in the market. There's a little bit of bounce to its step here. What is going on? Well, is this the bottom or is this the beginning of the bottom? Well, here's what I think. Let's go down to the 78-minute chart. So this is my factor of 5 fractal series. So we have monthly, weekly, daily, 78-minute chart. They're all separated approximately by a factor of 5. Okay, so what we've been talking about for the last couple of weeks, ever since we started this ugliness here, is I said, look, the market's not going to bottom out until we see this 78-minute chart quit making this series of lower highs and lower lows. And Wednesday was about as bad as it ever got, right? So even the bounce that came on Thursday was still not enough to print a higher high, okay? Although we may have printed a higher low, okay? So definitely now we have a higher high, which is above this point here. And what that does is increases the chance that any low from here is going to be a higher low. So what we have is more than likely a change in polarity on the 78-minute chart. And the way that that translates into the daily chart is it starts to pull up the daily chart. And now we have our usual suspects here. The fib retracements at 38.2, 50%, 61.8. Usually with a move that is this vicious, a lot of times what we'll see is that it'll eventually work itself up to about the 61.8% retracement. The reason for that is very similar to what happened back here in August, and we'll look at that in a second. When you throw something from a very tall building, especially a ball like this, it'll bounce up really, really high, won't it? And then it'll fall back down, bounce again, and then that's when we have our change in polarity. So this is just the very beginning of this. What I've seen on some of these moves in the past is that we'll get up to the first fib retracement at 38.2, and then it'll roll over again really hard and threaten to retest the bottom. And then what that does is that prints a very vicious higher low and gets too many shorts on board too late in the party, and then the short covering begins right after that. Okay, so eventually I would expect to see this move up to somewhere near this 1970 spot in the markets, right? Not immediately. I don't think it's immediately going to V-bottom right up there. I think we'll have an important higher low that occurs first. Let's go back and look at the move from August and see what a very similar type of move. Actually, the August move is a bit more vicious. But if we draw the fibs on this move here from the beginning of the move in August to the end, we can see that the price initially bounced straight up to the 50%. Again, I'm not expecting that. But what we did see was after a couple of weeks, we eventually did see the price grind its way higher up to that 61.8, and then it fell down again. Okay, so this included, if you look at just the daily chart, now let's just look at the daily chart. The daily chart had a higher low. So right off the bat, we zoom straight up, printed a nasty, nasty higher low, right? Nasty higher low, baked the shorts, came up here, printed a lower high. Now this is a weekly lower high because it took weeks to get up there. That's a weekly lower high. And then what happened was it fell down again, and that printed a higher low, actually, almost an equal low, but a higher low, okay? So we've got all sorts of fun in store for us over the next several weeks. Eventually we'll grind higher. Eventually we'll grind higher from here. Ultimately, though, I think this will just end up printing a lower high. I think a lot of damage has been done, and it's affected the psyche of the market. And a lot of people that went long up here are going to look to go whole once the price gets up in that area. So in other words, what they're going to look to do is to say, look, if I can just get out of this for break even, please. I mean, they're bending on their knees, just begging. Please bounce up to here and then all clear, go to cash. And so I think what we're going to have is in the short term, we're going to have a lot of overhead supply up in this area. It may not even get as far as the 61.8. May not even get that far. So I think I think we're going to have something similar to this on our hands, at least in the short term. And if this is destined for a true bear market, what will happen is the price will go down from here and keep on going. That's the big difference. That's the big difference between a sideways and volatile market, which we were in since the beginning of, or the end of August, to a true volatile and trending market or a bear market, is that the lower highs get sold into and then there's no respite from that. Okay, guys, hope that helps. We've had a scary couple of weeks, but I think we'll start to see some more familiar price action once we start to see the bounce coming up, and especially after we see that nasty higher low get printed. Hey guys, before you go, I just wanted to let you know that I'm going to be holding a webinar on Saturday for the top 10 skills for growing a small account with options. So it's going to be a Saturday webinar, Saturday at noon Eastern time. And it's going to be somewhere in the order of 2 to 3 hours or so. But if you don't have time for it, we'll get you the replay. And it's inexpensive. It's only going to be $97. So this is going to be a one-time only offer at $97. And past that, it's going to go up from there. So if you see this link up at the top here, tradingconceptsinc.com/introductory offer, the top 10 skills for growing a small account. Take a look at that and sign up. And I'll look to see you in the webinar. Thank you.